Hej och hjärtligt välkomna till Pressträff Direkt, den här gången med NevGold. Pressträff Direkt är ett samarbete mellan Direkt Studios, investerarbrevet.se, Scandinavian Alliance och de bolag som då presenteras. I dagens sändning kommer Brandon Bonifacio, VD för NevGold, presentera bolaget i sin helhet, bolagets ädelmetallsprospekt samt svara på just dina frågor. Ju tidigare du ställer frågorna i chattlinjen, ju större möjlighet är det för oss att hantera dem. Vi hanterar dem i slutet av presentationen. Eftersom bolaget är engelsktalande kommer vi nu att övergå på engelska. Hello, and if you tune in from across the pond, I wish you early and good morning. It's with great excitement I have the pleasure of introducing NevGold and its CEO Brandon Bonifacio. Brandon, how are things?
Great, thanks. Thanks for having me this morning.
It's a great pleasure. Well, please go ahead. The floor is yours. Really looking forward to this presentation.
Yeah, just before we get into the actual presentation itself, just a bit of background on myself and the company. I'm a mining engineer with a finance background. Previously, I worked for one of the world's largest gold companies, Goldcorp, before they were acquired by Newmont. And really, we formed NevGold back in 2020, 2021 timeframe, somewhat coinciding with COVID. And with my experience and our team's experience, the focus of ours was Nevada, Idaho, the western part of the United States, and really looking for oxide heap leach projects, which is the most simple and cost-effective way of extracting gold and gold production. And that's exactly what we've done over the past 12 to 24 months, and we're very excited about what we've accomplished to date, but also what we have going forward in terms of our fully funded 2023 work program and having a path to delivering on north of what is potentially a 3 million ounce oxide heap leach resource base, very economical in the western part of the US. I'll now jump in to the presentation. I think when you look at why NevGold, I think there's three main ingredients: projects, people, and a plan. And I think our company has all three of those in spades. When you look at the projects, which is item number one, we've acquired projects that have had over $80 million US spent on them. So there's been a lot of historical work on both of these projects. And we think we're going to be able to very quickly and very cost effectively drive these projects to, as I mentioned, that north of 3 million ounce gold resource by the end of the year. The people, number two, we have over 175 years of experience in operations and project development. And I think our main skill set is really having the right operating infrastructure in the Western US. We have access to all the key external contractors, drill rigs, assay labs. So the people are such a key component of any of these mining companies that your audience is looking at. And number three, the capital structure and a plan going forward. As of last December, we raised 4.1 million Canadian dollars, and that really allows us over 2023 deliver on our work programs. And as I will continue to highlight today, we have a path to delivering on above 3 million ounces of oxide heap leach gold by the end of the year. So we have many news catalysts, we have many key milestones and objectives, and our main focus now is delivering on those objectives over the next 6 to 9 months. As we shift to the portfolio, I think this is a great visual. We have an extremely well-rounded portfolio. Our Nutmeg Mountain project in Idaho, which we acquired last year, already has 1.1 million ounces of gold. So again, we're starting from a very strong resource profile, and we think that project has a lot of growth potential. And then the other key project we will speak about today is our Limousine Butte project in Nevada. That had a historical resource, but what's most exciting is we did around 10,000 meters of drilling on that last year, and we think we're well on our way at that project to delivering 1.5 million ounces by the end of this year. So again, we have two key flagship projects, Nutmeg Mountain in Idaho and Limousine Butte in Nevada. We already have around 1.5 million ounces between the both, but again, we think we have a path to double that by the end of the year. So it's a very exciting time for the audience to be looking at the story. As I just touched on, and our main focus today will be on Limousine Butte in Nevada and Nutmeg Mountain in Idaho. So just by way of reference, you can see we're extremely focused on the Western Belt in North America. And when you look at the best places to find and mine gold in the world, Nevada and Idaho, there are no better places. They consistently rank in the top 5 mining jurisdictions in the world, and we're extremely excited about what that entails for our company going forward in terms of the project development of both of these assets. I always like to highlight on the front end of the presentation some comparables because I think it's very important to understand your peers and other projects with similar characteristics. Our projects are oxide heap leach gold. Oxide and heap leach are the most simple way of gold extraction. And when you look at our projects, both Limousine Butte and Nutmeg Mountain have what is high grade oxide. And that is very important. I like to highlight this slide because when you look at some of the peer companies or projects that are already in operations, producing under ownership of some of the major large cap companies in the world, our grade profile of 0.65 to 0.7 at Nutmeg Mountain and north of 0.8 gram per ton, the average is around 0.5 to 0.55. So again, we have 30 to 40% higher grade than our peers. And that is a very important aspect because projects with grade, that's what really drives project economics. And we're very happy with the 2 projects that we have currently. Another metric we've tried to incorporate, because I think this is a very important attribute of a mining project, is strip ratio. So what we've done is we've created this strip ratio adjusted grade, which effectively takes grade divided by strip ratio. And for the audience, strip ratio is effectively how much rock you need to move to get to the gold. What's very important about our projects, the gold starts at surface. So when you look at the strip ratio adjusted grade, we are 3 to 5 times that same peer group from the last slide. And again, grade and strip ratio drive project economics. So when I highlight today, these are economical projects and have very strong economics. This is part and parcel to the last 2 slides I just showed. We'll zoom in now on Nutmeg Mountain. Nutmeg Mountain's located around an hour and a half north of Boise, Idaho, which is the capital of the state. It has great infrastructure. We have water on site. We have power. It's accessed by paved state highways. And I don't say this tongue in cheek, but I've taken an Uber from the airport in Boise to the project. So again, the infrastructure is also very important when you're looking at these projects, and we have great infrastructure at Nutmeg Mountain. And what's also very important here is you can see in the bottom right, the historical resource that was done in 2020, 1.1 million ounces effectively sticking out of the ground. So we know we have a very economical resource at Nutmeg Mountain. And our focus now is taking that 1.1 million ounces and driving it over 2 to 3 million ounces. This type of geological system is very interesting. I view it as having 2 zones. And when we mention where we think the growth is in the resource, and we'll talk about it over the coming slides, all that's being drilled at Nutmeg Mountain is that top blue oval or the upper part of the system. The drilling at the project, and it's had over 70,000 meters, which would be around $30 million US to complete in today's world. That accounts for the 1.1 million ounces. The resource has never been drilled deeper. So our main focus is drilling deeper than the 75 meters. We've come out with some results already, and we're continuously drilling the program today. And we think we're going to be able to expand that resource significantly higher than the current 1.1 million ounces. So when we look at what we've drilled to date and where we see the growth, that 1.1 million ounces, which touches on the last slide, is in the red part on this page. So you can see the red part of the resource is the 1.1 million ounces, but it has a thickness of only 75 to 80 meters. What we've uncovered going through the historical drilling, but then with some of our drilling to date, is there's another 100 meters vertically below that. So when we say we can double the resource, we think that extra 100 meters, which is in the gold oval here, is really what's going to be able to drive us to that doubling or tripling of the resource that we already have. So again, the project has a lot of growth, and we're extremely excited about testing that growth this year and then updating the resource by the end of the year. What's also important at this project specifically is we have a high grade portion in that resource. So this is a nice reference point that there is high grade material of 0.9 to 1 gram per ton. So as I touched on in some of the past slides, that's more than double the average grade for this type of project. So again, with my mining engineer and finance hat on, which is what I've done previously in my past life, this project, when we get to the engineering studies in 2024, because of some of these key attributes, is going to stand out tremendously from an economical standpoint. And that's really what we're trying to do as a company. It's find economical ounces and develop them over the coming years. A very important topic in today's world, and something we pay a lot of attention to, is the ESG, or the environmental and social governance. I think our group has a lot of experience in this area. We understand permitting roadmaps, we understand environmental standards, we understand how to deal with local communities, and that's exactly what we've done at our Nutmeg Mountain project and also in Nevada. From an environmental and permitting standpoint, this project is in a very favorable part of Nevada. So from an environmental and social governance standpoint, the most important takeaway is we're up to the highest of standards. We know how to manage the key areas from an ESG standpoint, and that's something that requires continuous management. It's not a one-off, it's something that we do consistently, daily, monthly, and yearly, and that's what we will continue to do going forward. As we shift down to Limousine Butte, which is the state that's south of Idaho, our project is situated in one of the most promising trends in Nevada called the Carlin Trend. I think when you look at our project, there's a number of operations that are producing gold around us. There's a number of multi-billion-dollar companies operating right next door, which we'll touch on. And we're in a very favorable part of Nevada with a project, again, that has a large historical database. We know there's gold in the ground. We know there's a historical resource. And as I touched on last year, we drilled it 10,000 meters and we came back with some exceptional results. And we'll walk through some of those today. Talking about the district and who's around us, because this is such a key aspect of any mining district in the world. You can see on this slide, our boundary is highlighted in gold. We have a number of target areas which are in the gold ovals, and we've only drilled 2 of these, but the main focus of this slide is really looking at the neighbors. One of the world's largest copper producers, Freeport-McMoRan, which is listed on the New York Stock Exchange, they're drilling immediately adjacent to our southwest. They're drilling a very, very large copper porphyry system, and they think they're on to the next copper discovery in the western part of the US. So having a $45 billion US company drilling right next to us, effectively on our boundary, that's a very exciting aspect to this Limousine Butte project. And then you can see to the northeast, we have another large Canadian gold producer called Centerra Gold, which has an approximate $1.4 billion market cap, and they're drilling the Cherry Creek project. So again, the district has a lot of activity. We think we have the strongest land position in the district, but again, having groups like Freeport and Centerra drilling next to us is a very advantageous position to be in for NevGold. When we look at the project and zooming in a bit further, there's 2 key deposit areas that we drilled last year. Those are Resurrection Ridge and Cadillac Valley. Resurrection Ridge had a historical resource of around 400,000 ounces. After the drilling that we accomplished last year, we think that resource has significant growth behind it. What's also very important is the Cadillac Valley target area, which is around 2 kilometers to the southwest. We drilled and made a new discovery there. So we think combined between Resurrection Ridge and Cadillac Valley, this project could deliver on close to 1.5 million ounces. But that is just a small part of the larger project package that we have. And again, that gives us blue sky potential and a lot of further growth opportunities past that 1.5 million ounces. When we look at some of the results, and this is focused on Resurrection Ridge, and these are some of the drill holes that we put out last year, again, similar to Nutmeg Mountain in Idaho, this project mineralization starts less than 20 meters below surface. You can see in red there, we've got the area that we've drilled out. It has a very good thickness of approximately 65 meters. And as I mentioned before, grade is king. and grade drives project economics, and you can see the type of grades that we've had within this program. 62 meters of 2.2 gram per ton with a higher grade subinterval of 11.5 meters of close to 8.5 gram per ton. So again, we have high grade oxide heap leach material here, and we're seeing a lot of strong consistency, and consistency is also a very important factor. I think this is a nice bird's eye view of the project, and I didn't touch on it yet, and that's why I like to focus on it on this slide, but this had and was a past producing mine. And what they say is there's no better place to find more gold than next to a mine, and that's exactly what we're doing. You can see the small circle there on the middle of the slide. That's actually what pulled out 100,000 ounces of gold in 1990. The only reason the project was stopped from operations was because of the gold price at the time, and we're drilling right to the northeast of it. So again, we think we're in a very favorable location here. We know there's gold in the ground, and we're stepping out and we're finding a lot more. We've now drilled out that red area, but as I mentioned, we still have another kilometer of ground to the northeast that's untested and underexplored from a growth standpoint. As I've touched on, this story really has two key deposit areas currently, Resurrection Ridge and Cadillac Valley. The last slide we were on was on Resurrection Ridge to the northeast. Now moving 2 kilometers to the southwest, we have this very promising location called Cadillac Valley. I'll skip to the next slide because this Cadillac Valley area is where we see a lot of growth at the project. You can see on this slide some of the drill holes that we released last year. 175 meters of 0.86 gram per ton. Let me repeat, 175 meters. That is extremely thick for this type of project and this type of mineralization. And then we hit another 126 meters of 0.83 gram per ton. So again, our peers have projects with grades of 0.4 to 0.5. We're seeing double or triple the grade profile. So that is a very important factor. And as I mentioned, that's what drives project economics when we get there. This is again another bird's eye view of Cadillac Valley. You can see we've drilled out the red area, which is over 1.5 kilometers of prospective ground by 400 meters laterally, but there's still another 1.5 kilometers to the southwest. So again, we're drilling out and de-risking the project. We have a path to a 1.5 million ounce resource, but we also have growth in the pipeline. And growth is also very important to highlight because we have a lot of blue sky in both Nevada and Idaho. That's a great segue, and I did slide over our two non-core assets, but I think it's better to talk now about our 2023 work program, where we are now and where we're going. So from a work program standpoint, we've drilled over 3,000 meters already at our Nutmeg Mountain project in Idaho. That drill program will continue over the next 2 quarters. And then the plan in Nevada is we're going to be putting a drill rig on that project in approximately June of this year. When you look at the combined meterage, we're going to be doing around 12,000 meters of drilling this year. And then the plan is to advance both to the updated resource by the end of the year. So you talk about key catalysts in the mining development business, and drilling and resource updates are 2 of those key milestones, and we have both of those this year. When you're looking at the budget, it's only 3 million Canadian. And as I touched on, we raised 4.1 million last December. So we are fully funded to complete a lot of these high value add, low cost activities. And we think that is what's going to drive the valuation re-rate in the marketplace from a market capitalization standpoint. I won't touch on each individual on the executive or board level, but when you look at our team, I think there's always 3 key ingredients. It's capital markets, technical, and the key topic of environmental and social governance. And I think our group, it has a blend of youthful energeticness with myself, but we have a lot of experience at the board level. And I think that combination in today's world can be very dangerous. And I think it's extremely positive to see how much we're able to do very cost effectively and very efficiently. And I think our team has the right skill set for this type of project and this type of operations in the Western United States. So we're very happy with the team that we have in place, and I think it's going to bode well as we further advance and de-risk our projects. When you look at the capital structure, and this is not something we've touched on yet, but we're very tightly held from a capital structure standpoint. We only have 71.5 million shares outstanding. But when you look at our shareholder registry, over 55% of that is held in 3 blocks. Us as our insider group owns over 30% of the company. We have financed the company to today. We've put a lot of our own money into the company. You can see us buying consistently in the open market, and we believe and effectively have a lot of skin in the game. So we're aligned with our shareholders. Very rarely do you see that large of a position continue to be held by the insiders and directors of a company. And I think that's very important for the audience, that we have a lot of skin in the game ourselves and we're aligned with our shareholders. And that's extremely important as we look to build budgets and plan work programs. The other 2 key large shareholders are Gold Mining Inc., which is a large Canadian gold developer that's also listed on the New York Stock Exchange. They own around 17% of us. And then a large Canadian gold producer called McEwen Mining owns 7%. So as I mentioned, 55% is held in extremely strong hands, and the current float is around 45%, but very tightly held capital structure. And then this is my most favorite slide to talk about, and really I like to end on it because I think it's the roadmap. We know what we're doing and we know where we're going, and that's the most important for these type of stories. We're on the far left of the graph. Even just based on the ounces we currently have building in no growth, we're trading at less than $15 per gold ounce in the ground. Our peer group trades at around $70 per ounce in the ground. So if we can deliver and drive towards what is that 3 million ounce resource by the end of the year, you can see this is not a 2 to 3 times valuation re-rate. This could be 6 to 7 to 8 times. So when we're looking at what we can do this year for a $3 million budget and the key catalysts and milestones that we have a lot of growth in our business today. And I think from an investor or your audience today, what's really important is we know what we're doing and the roadmap is very clear. It's very linear. And as we de-risk and advance our assets, we are going to see that valuation creep in. And that's a very exciting time to be looking at the story. And we think by the end of the year, we will not be sitting on the far left of the slide. We will have moved to the right. And that means a lot of valuation uplift from our current valuation today. That was it for the slide deck. And now I'll open it up to maybe some Q&A.
Well, excellent, Brandon. Thank you. Very exciting. And I would just like to touch upon the fact that you mentioned you have a lot of skin in the game. Am I right in assuming that you have participated in all the add-ons in order to defend your position? And that's true for the insiders in NevGold.
Yes, I was personally buying as of this past Monday and last Friday in the open market. So you can see that on what's called the SETI reporting in Canada. So yes, we are extremely supportive. We believe in what we're doing, and we will always support our companies tremendously.
Well, interesting there. And could I just then mention, because it's extremely exciting, I must say, and the upside, as you mentioned, blue sky is tremendous. But why did the seller of respective asset or area sell to you? I mean, why did they sell and why did they sell to you?
So the why to us, it really came back to the people and relationships. We knew both of the groups from our past dealings, and they trusted us in terms of building a team, raising money, and being able to advance the projects. In terms of why did they sell, and this tends to happen in different commodity price cycles, but you tend to have a portfolio of assets. And at the end of the day, if a company is not working on an asset, instead of it sitting dormant or on care and maintenance, it's better for them to advance the project through groups like us who have a nimble operation, who have the right skill set to advance it. And what's important is they have their upside protected because of the equity position they have in us. So really, it's a win-win situation for them and for us. And I think it's a very favorable relationship in terms of how we can advance the project, but they still continue to have upside and potential value lift in terms of us because of what we're doing in terms of advancing the project. So again, it gets back to a win-win. They weren't going to be working on the projects and they felt we were the right groups to advance them.
So basically, you didn't really buy completely from them. You are buying and working with them.
Exactly. And that's why I don't know if the slide deck's up, but when I talked about the capital structure, gold mining owns 17% of us and McEwen owns 7%. So they have effectively skin in the game in our success.
And you mentioned the attractive locations and the jurisdictions, and obviously extremely important now, always been, but more important so now when you have all the geopolitical turmoil, I would say, and perhaps we're being more local than global in this case. But is there a difference in jurisdictions between Nevada, Idaho, and British Columbia?
Yes, definitely. I think every state or every province in Canada has different nuances. And I think you need to understand the different nuances. You need to understand the key players in terms of the government regulators or the key permitting officials, et cetera, et cetera. But what I would say is Nevada and Idaho have a lot of similarities. We think we know the right people in those states. We know the right regulatory authorities. We know the roadmap of how to advance a project from a permitting and community standpoint. So what I would say in terms of specifically Nevada and Idaho, the jurisdictions are very similar.
And obviously hasn't been any bottleneck for you going forward.
Absolutely none. And I think that gets back to our people. We have certain individuals on our board, and they've permitted projects in the Western US all the way to construction and production. So again, we have a well-defined roadmap. I think the roadmap is something I always like to highlight. We know what we're doing. We've done it before, and we're going to replicate that with NevGold.
And in the beginning here, and when you mentioned your background as well, you were talking a little bit about heap leach. The pros and the cons there. I mean, the pros, obviously, it's surface, so it's probably quicker and cheaper. Is there any ESG problems coming up here? You had an ESG slide, of course, but
not in Nevada or Idaho. I know one of the key aspects of a heap leach project is the usage of cyanide, but in today's standards and in today's advanced mining world, cyanide can be contained if you know exactly what you're doing, and that's what we know how to do. So again, I see very minimal risk in terms of where we're located and where we're situated, especially that it's Nevada and Idaho. So from an ESG standpoint, very, very low risk in terms of our project areas, not just because of where they're located in the States, but also because of having no impacts from a water standpoint. There's no communities nearby, and we know how to operate this type of operation.
So it's good to get that out of the way then. And obviously, if you work in those states and in this jurisdiction, it's a guarantee, obviously, that things are taken care of, I would assume.
Yes.
Yeah. And could I just expose my ignorance here, because I think I saw the words high grade and bonanza grade, and what is there a difference? And if so, it sounds like it would be a significant difference.
Yeah, and that's mostly on the Nevada and Idaho projects. The near surface material, which is what is heap leachable and oxide, that is what I would call high grade heap leach and oxide. But what has never been tested is the depth potential. And when you're drilling at depth with this type of geological system, sometimes there can be very concentrated, extremely high grade or bonanza grade areas. So that is part of the story also, that we think we're de-risking and we have a lot of value at surface, and that's what would be mined initially. But we don't know the cherry at depth. And I use that analogy, the cherry on top, but there could be something significant at depth. And that's part of the programs that we're drilling in both Idaho and Nevada this year, is that we could have something very significant at depth that needs to be tested.
And if we look at the environment, and the focus on gold is always very high when there is inflation, and the inflation obviously have gone up since 2020. How does that affect you when it comes to rigs, hiring staff, things like that?
Yeah, I think we've seen small inflationary pressures creep in, and a lot of that gets back to fuel and labor. I think the nice part with us, we're not in production yet, so we're less exposed to those cost pressures. We run a very lean and nimble organization. So I think from that standpoint, we haven't felt the cost pressures, but we've felt obviously the gold price increase, which helps us all. And I do see that inflation starting to roll over based on what I've seen. I think what's important as we further advance is inflation's important to look at, but I think what's more important is the underlying gold price itself. Gold the past 24 hours is back at 2020 per ounce. And I think this year, I don't know if it happens tomorrow, next week, or a month or 2 months away, we will see all-time highs in gold, is my prognosis. So again, I think we're going to have significant tailwinds in the gold price, and I do see inflation starting to roll over based on our inroads and what we're seeing from a cost standpoint. And what's also important, these type of operations being heap leach and oxide, you are less exposed to inflationary pressures because the organization or the operation is smaller. You have less people, you require less fuel, you require less water, so there's less cost inputs. And maybe I'll touch on, when we get to the engineering studies on this type of project, the all-in sustaining cost, or what it would take to take the gold out of the ground, even with small inflationary pressures, would still be around $850 to $950 per ounce. So if you're talking about a $2,000 gold price environment, that's over 100% margin. That drives significant cash flow.
That's an excellent answer to my next question, actually, because the question was really how important would the gold price moment be for your investment decision and drill program. And as you mentioned here, if your cost is around 800 and now we have a gold price around 2,000, then obviously it's still driving it forward, I would say.
Yes, and that's why we focus on these type of questions. Sorry to jump in there, right? Yeah. These type of projects, sorry, it's because of that. It's because your downside's protected, but you have all the upside. And I think that's very important because even if there's fluctuations in gold price, these type of projects are still very economical.
And the next questions here will be more or less intertwined here, but first, are you for sale at this moment?
No, but we've obviously, and we always have advanced discussions with larger companies than us. So no, and I'm an owner of the business. I think what's most important is this year focusing on driving to the updated resource estimate. And I think, as I mentioned, there's a massive valuation lift in that process. But of course, we always keep advanced discussions open, and we're always open to have them now. But there's a lot for us to do this year in terms of driving more value in our business.
And then obviously then the re-rating and one of your last slides here, they're quite tempting, I would say. So you're now trading at 15 Canadian dollars per gold and enterprise value, is that correct? And your peers are 70. Do you think it's more down to the fact that you're a young company and I mean, young and small, if I may be so bold?
Yes, I think we've only been around for around 18 to 20 months now. We've made 2 acquisitions over the last 18 months. And I think right now, if you had to ask me, I think we're being only valued on Nevada or only valued on Idaho. I don't think people have realized both of these projects have significant resource upside and significant resource growth. And I think when we start to get value as we drill both projects this year for both of the assets combined, that valuation will start to creep in. So I think that's one part of it. And as you mentioned, it's about daylighting the value and doing things like this and ensuring that the awareness of the company gets out there. It's going to be a very news-heavy year. We have a lot of key catalysts. And as we continue to drill and continue to deliver on what we say we're going to deliver on, that's also part of the reason why I think we're going to have that valuation lift over the coming 6 to 9 months.
And forgive me my ignorance here, but then obviously you will have to drill and drill and drill, and obviously you drill and then there's a tests and so on. So what kind of data points would you like the market to be wary about? It's not the quarterly results, it's more updates on drill results, or how should we look at this? Like a pharmaceutical research company, or more or less?
Great question. Yeah, I actually think it's mostly focused on our news flow. Our news flow is around every month, I would say. We like to have a good periodicity in terms of bringing news to market. So it's not necessarily a quarterly thing, it's more of a monthly thing. And the key catalyst the next 3 to 6 months are going to be our drill results coming to market. We just came out with some drill results around 2 weeks ago, and we're expecting more drill results in 2 weeks. And then another 6 weeks thereafter, et cetera, et cetera. So it's going to be around every month going forward. We're going to have drill results, and those are the key catalysts for us over the next 3 to 6 months.
Well, excellent. Thank you, Brandon. Very, very exciting. And if I may just make a quick summary here, I mean, basically you are undervalued as you are at this point if you just look at the peers. Even if you didn't do anything, you should actually, by being a year older as a company, increase your value. But at the same time, you are drilling and exposing, which should put a highlight on this. And it seems like the macro environment is definitely working in your favor. You would agree, I assume.
Completely agree.
Yeah, excellent. Well, so thank you so much, Brandon. It's been an absolute pleasure. So we will look forward to the monthly report. And now I will switch over to Swedish then. Så då tackar vi alla som har tittat. Och har ni fler frågor så får ni vända er till NevGold. Och de har en alldeles utmärkt hemsida där ni även kan se andra intervjuer och uppdateringar. Och med det så tackar vi för oss. Tack på återseende.